What is up, everybody? We made it. Asian Steve. I can't get over this thing. But anyways, good morning. Good morning. How can I be late? The world's not crashing. And it's like, a couple seconds. Late Jason. Am I getting this now? Is the late Jason, the late whatever? Oh my goodness. You guys. You know what happened? Steve-o, I'm kind of sick right now. So it's like, I'm loaded up with, this is emergency. My buddy convinced me to buy this thing called banana bags. Has anybody tried this? This is like the new, I don't know if it's new. I mean, it's, liquid IV kind of stuff. Who knows? I don't think it's working. So if I cough and I mute like that, hopefully I don't forget to unmute. So let me know. What should we do with Rivi? Hello. Rivi's, dude, I'm in for the long. Airborne? I mean, I've never been a big Airborne guy or like Zycam or any of that kind of stuff. But anyways, we got a lot to cover today. So big week. Earnings season, by the way, is starting. Let me go ahead and kick this off. Where's my mouse? Let's see if I can share. There we go. Do you guys like the graphic? I mean, it was a different style. He's in the house. Also, championships are over. So it's Patriots versus the Seahawks. I don't know what my quant says here, but I'm pretty sure it's the Seahawks. I don't know. We'll see. I sent in our sports bet chat. I was like, dude, are we just gonna bet this now that it's Seahawks for the Super Bowl? Because I was like, we could do the combo parlay, Patriots plus Seahawks, and then I got a little pushback from the crew. But who knows? We shall see. My Jason Momoa. I like Jason Momoa. But here we are. So welcome, by the way, if you're new to the stream, what we do every Monday, as long as the markets are open, we weren't open last Monday, so it didn't have it, is we kind of go over briefly, like, what do we have to look forward to? What happened this last week? I sent an invite to my buddy Evan today. I don't know if he's going to be able to join, but I want to make sure that we hit his Catalyst watch. He does a pretty good pretty thorough Catalyst watch. Niners, baby. These guys are just like distracting me. But what an embarrassing game that Niners and Seahawks thing was. But at least if you're gonna if you're gonna lose, you might as well get slapped by the Super Bowl champs. So for their sake, I hope the Seahawks win. But that was a bad game. That was over. That whole game was over in the first possession, man. But anyways, silver. I made some calls to a buddy of mine. Well, I made a call to a buddy of mine. I was like, oh, what am I going to do with the silver? Because I told you, I pulled it out of the safe the other day. And at this point, I'm pretty sure I'm going to. But what I decided for sure this morning was that, well, if I see silver over 150, I think I'm going to trade it in for some gold. That's just my thoughts, my 2 cents. I think it can still go, but I have more silver than gold, so that's just why. That's my personal opinion. And mostly just because I have a lot more silver than I do have gold. And this stuff is heavy. And gold is not, silver is like, what is the outperforming gold by, multiple factors here at this point. But if you like this stuff, you like this stuff long term. I don't know that you really need to. I don't think I'm going to sell anything. But swapping, silver for gold down the road, if this continues to go higher, I'd say over 150, I'm definitely doing that. Some of it, I don't think it's a bad idea, and I'm not selling anything. My son told me yesterday Seahawks scored as many points as they needed in the first 10 seconds to beat. Dude, it was so bad. It was so bad. I'm just saying, it was. I couldn't watch that game. Yeah, no. So I don't. So Justin, this is what I was thinking. I have silver bullion, actual silver, right, at home, and that's all I was thinking. I was like, if I see silver over 150 an ounce, I'll probably go into the coin shop. People gave me shit about taking it to a pawn shop. I'll probably go to the coin shop, and I'll probably swap it out for some gold. Because, silver can go parabolic, and it could probably go a lot higher. But I'm not nearly as worried about gold, really. But if you hated silver at 20, you'll love it at 150. I mean, that's the other thing is like, I like them all. I don't own any copper. Does anybody own copper here? This thing, I was like, well, copper might be the one that still has yet to go, like has even more parabolic, whatever. And I totally missed the platinum one too, because I remember looking at platinum, it was like $600 an ounce, and gold was like 25 when I was looking at it. And I was like, platinum shouldn't be cheaper than gold, right? Like not really, but now it's caught up. Why? So it's just a long-term thing, because I like the bullion. I like having bullion in general. So I was thinking about, I just don't want to sell the bullion, like the physical assets. But can I swap between one for the other from time to time? Yeah, I think so. If it gets, as a way to compound that itself, yeah, I think so. Over time, like we're talking like, never sell type time frame, 10, 30, 40, 50 years, assuming I'm around that long. The kids will have it. I'm probably never going to sell it. Freeport McMoRan, that. Yeah, so Freeport for sure. But yeah, that's where I'm at. I think that for whatever reason, people are thinking that silver's got, it does have industrial usage. But if silver's really running on this, I'm like, okay, we are in a generational data center build out era. That's true. And if the data centers are going to serve all this data to the end user or consumers, it's like, what is data, the data transport layer, like data runs, it doesn't run over, you're not going to see massive runs of silver cables. Like that's just not happening. But you will see it, massive runs of copper cables all day long. So I think, is it a better play? Maybe in the short term. I think silver can continue, but I think these guys, copx is the ETF, right? I think those can go even more parabolic if that rhetoric really continues. But that's where I'm at. Am I taking my silver and swapping it out for copper? I mean, you might actually make some money in the near term. I think that you could potentially make some money swapping silver for copper in the near term. But long term, I definitely want to accumulate more gold, because copper and silver, they will go up and down like crazy. And sometimes their runs are absolutely parabolic, but they end up crashing down. It's like, will you swap out your altcoins for Bitcoin from time to time? Yeah, for sure. And if they all come down, look, gold's going to come down too. But when those moments come, gold will go down less than silver or copper. And that's really just the logic. Is that anytime soon? I have no idea. Just mix it 50-50. Well, that's what I'm saying. Like right now, I'm like 80-20, 80% silver, 20% gold. So that's for me and my personal logic, because I'm 80% silver, 20% gold. I think that logic of me going heavier silver at the time and lighter gold at the time has started to play out. So that's all I'm thinking of. But then I don't have any copper, so I'm like, well, maybe I swap into some copper and some gold just for, I don't know. That'd be weird, like a trade. Does anybody do that? Do you actually go to the coin shop? Let's say if you had 50 ounces of gold and swap it for 500 ounces or however many ounces of silver, like that's a big weight exchange. But have you ever done that? Swap out one metal for another. I don't think that's taxable, right? I don't think that. Oh, you're so nice, so nice. but yeah, I'm having to put more and more thought into this because like I wasn't expecting to have to think this hard about it, but the further this goes, the more I have to think about it. So, but the moral of this story is I don't think we're done. 150. I'm saying over 150. I might think about it. Think about it. Doesn't mean I'm going to do it. For all I know, I mean, this could be $1,000 an ounce. Who knows? I mean, actually had that dream. It is taxable. See, that would be a problem. If that is a taxable transaction, that's a whole nother level of thinking that I have to do. Yeah. So I would have to assume, let's say if I was going to take in a bunch of silver, swap it out for something like copper that I thought could go a little bit more parabolic, that would have to be a trade. But if that's the case, look, 53% tax bracket over here. I'd have to think that there's going to be a lot more to go for sure. But I will tell you this. I ain't swapping it for dollars. That's what I'm not doing. I'm not swapping any bullion for dollars for sure. So because of that, yeah, no, I'm not. If I were to sell, it's like you're thinking of it like that. It's like if you're going to sell this stuff, you're literally swapping this parabolic asset to something that's looks like it's good. It's cliff diving. So I feel like that would be a bad trade in and of itself. Like I feel like selling would probably be a bad trade because the dollar's going down, which is lame, but it is what it is. Milky Steve, I should invite this guy to a stream, huh? Maybe I'll get him to come over here. That's what I think I'll do. I'll ping him maybe next Monday. Yeah, I think everybody's getting a little sick. I'm not the only one. Reaching out to a couple other people. You can hear it in my voice, right? I sound like doo-doo. Swap it for yen. Okay. That's potentially an idea. I could swap it for yen. I'm not opposed to that. Questions about this stuff, I think we'll take a look at that. Yeah, that's what I'm saying. People swap baseball cards, Pokemon cards all the time. Why not swap gold and silver? I mean, if it's not taxable, one for one, like for like, or even if it's a definitive transaction, like can I 1-to-1? Like I shouldn't get taxed on that. Steve works during the day. I mean, so do I, but this is our job, right? I'm working right now. Oh man. Yeah, I did. I talked to Steve. We had some exchange back and forth. I finally got his number. We finally got each other's numbers. So he said he wants to interview me. Maybe you guys will watch that and we'll give you the story of Jason. Who knows? I know. I was like, he wants to do this unwrapping or like a quarter pool, like where they do the card pools for Pokemon or sports cards. He wants to unwrap a roll of quarters. This guy cracks me up, dude. He wants to buy $1,000 worth of quarters. I think he might have actually bought $1,000 worth of quarters and like film him pulling every quarter while he's looking for these pre-1963 quarters that are made of silver. I'm like, dude, I will be down. I would totally do that. I mean, we should do it like at the same time, right? Like I'll grab $1,000 of the quarter. Can you imagine how long that stream will be. Plus, by the way, like I will probably go and buy $10,000 of quarters, and that would be real. And then I would just weigh each roll of quarters, and then I would give back to the bank the ones that weigh less, and then I'll just use this as like, hey, this is my $1,000 of quarters. Let's see who does better. Because I mean, like, why wouldn't you just do it with weight? But anyways, that's what it is. Jeez. This cough, man. I get this cough too once a year. If it's really bad, it's once a year. Sometimes not every year, but it sticks with me for like a multiple months on end. I'm like, oh God, I hope this isn't the one. But anyways, yeah, I had a little trouble getting set up this morning. You ever have like, I have backup keyboards and mice, and I'm like mid prep, I'm like, why? I can't click on anything. I'm restarting my computer's hard reset. And I'm like, dude, I had a keyboard on the floor that was backup keyboard plugged in, and I had dropped like my jacket or something on it, and it was hitting keys, which is why I couldn't click on it. It took me like 30 minutes to figure that out this morning. It was so bad. Steve opened one roll. I like this. 64 Kennedy half dollars. Not many people know these. 64 Kennedy. Dude, I am so loaded to the gills. Like, you have no idea. Like, I have these cough drops. Mucinex. I haven't done that. I have like Nasonex spray. I have Chloraseptic. What else do I have? Tea at the ready. Like, I don't know. Ibuprofen. That's it. That's all I take, really. But I just constantly overload vitamins and whatever. No, we haven't done anything, honestly. But fine. Let's go ahead and start the show. Because, I mean, I like the graphic, though. Diving into my safe of silver. I might just swim around for a while. That's kind of what I'm thinking. But anyway, so this is where we're at. So right now, last week we got some economic data, and obviously GDP growth rate was pretty heavy. I think this is the right data. You stole a pharmacy. I mean, dude, I go to the pharmacy. I load up with like $100 worth of vitamins. I'm like, dude, no, you guys are so nice. But every time I go, I like my doc. He's like Flonase, Nasonex, ibuprofen, and my inhaler for the cough, which is all I haven't grabbed yet. I got to go pick it up. But that's it. So anyways, growth rate last quarter over quarter. This is heavy growth rate. So we came in at 4.4. We had an expectation, very high growth rate, 4.3. We actually exceeded that. Prior GDP, this is like the economy's growth rate, 3.8%. So massive jumps in actual GDP. I think this is a big deal. Typically, when we see GDP jump like this, the market gets a little cautious of running too hot. I don't know if you guys remember us talking about, and I don't have the slide ready, but about the Goldilocks versus disinflation and things like that. I think I'm very much still there. I think we land in Goldilocks. And in the meantime, what we're kind of dealing with is some of this disinflation concerns. But look, GDP is growth. So like if we're getting 4.3% GDP, no, we're not doing this. Inflation rate declines. So we're not seeing that. What we are seeing, and that's why I'm like potential, is extremely high GDP. And so this is normal cycle. We're having some kind of combination between inflation and disinflation. We're not talking about deflation, right? So like we have no severe contraction. We're not talking about negative inflation. We might just be here, like where Trump's trying to get policy stimulus, prices are slightly rising from the lows. I mean, I don't know, but I think that we're really just, in my just opinion, unprofessional opinion, is that we're going from this inflation to disinflation, and the bounce back and forth at the end of the day is right in here, right? Renewed stimulus, recovery. You know, we're still kind of in a warming spot, and at the end of the day, this lands at steady growth, moderate inflation, which is healthy, moderate inflation, and as long as this unemployment stays low, that's all that really matters. And I think that balance is literally what the market is kind of bouncing back and forth on. So that means we have to kind of look at some of the other stuff here. So PCE, which is consumer spending, if you don't know, so core PCE, this is MOM, means month over month, YOY means year over year. So month over month, are we spending more, right? Not really. So the prior was 2%, 0.2%. We come in at 0.2% with an expectation of 0.1%. It's totally fine. But the year over year number here, coming in at 2.8 versus a 2.7 prior and expected, just fine. We're totally fine. And as long as, what's interesting is that this is below inflation. So, I mean, that's a whole nother thing. Personal income, are we actually making more? We come in at 0.2 versus 0.4 prior and a 0.3 expected. We're actually not making a lot more yet, not at the personal level, maybe the corporate level, but this GDP, where this is coming from, I think is what we're going to really see. Does that high growth waterfall down to the actual consumer? And if it does, you know, if the consumer ends up having more money, at that point, not before, but at that point, we maybe have some like inflation talk. But that's really it. For now, personal spending, we've got extra parentheses. Personal spending actually comes in month over month, 0.5 versus exactly the same. So we're not actually spending more. We grew more. So inflation in this situation shouldn't honestly be a big thing. Meanwhile, NVIDIA this morning announces another $2 billion into CoreWeave, which, you know, that's for the next, through 2030. It's for like the next 5 gigawatts or something like that, but it's through 2030. It's not all at once, but it's just a commitment, and they end up buying, they bought $2 billion, right? They bought $2 billion in shares at $80-something. So yeah, I mean, we'll see how that goes. But Jensen's statement this morning was really like, hey, look, CoreWeave, he really likes CoreWeave. I mean, the rhetoric that he was using when he was talking about CoreWeave was pretty strong. You know, he was like, they're not going to be a small player. They're going to be a big player. I don't know if CoreWeave is doing they're probably doing a similar commitment where like, we're going to go all in NVIDIA. But one thing that Jensen did talk about this morning that, you know, perked my ears up, you know, if NVIDIA, which has been absolutely stale for, I don't know, 6 months or more, NVIDIA's gone nowhere. And it's not robotics that's going to get them to the next thing, at least not right now. But in my mind, it was like, there has to be another product or something like that NVIDIA enters the market with. And if that's the case, then cool. And I was at the time was that maybe it has something to do with the old Mellanox purchase or acquisition, or maybe it's like memory chips. Today, the guy says it's CPUs or processors. So I guess there's a Vera processor, which, I mean, maybe I'm just dumb or not listening to the headlines and I'm just figuring this out now. Or maybe he's been talking about it for a long time. I don't know. But I mean, apparently, so NVIDIA Vera processor, not that the CPU market is massive in comparison, But that was always in my mind. It's like when he virtualized way back when, 10 years ago, when NVIDIA virtualized the GPU back in the day, I was like, well, there's not going to be, might not even be a reason to have CPUs at a certain point. Vera is the CPU. But NVIDIA could easily, in my mind, like enter or take over and be like the main player in the CPU arena, which is probably why we're also seeing Intel down a little bit today and AMD maybe pulling back slightly as well. So, that's a big deal to me. And he kind of brushed over it. And again, maybe I'm just like deaf and he's been talking about this for a long time, but for whatever reason, it didn't register for me before, but it registered for me today. It's like, okay, NVIDIA's saying this. They showed it off at CES. Yeah, but I mean, like nobody really talked about it post CES, Vera CPU. I'm just saying that this is that one thing this is the one thing. I think that's it, right? This is the one thing. And eventually it just basically means, look, they're probably going to expand the entire stack. They're probably going to make memory. They're probably going to do all kinds of stuff. I mean, we know that they wanted to do this for a long time and just basically be the full stack integration, one stop plug and play kind of thing. But, Vera, CPU, NVIDIA. Yeah. That makes a lot of sense. The reason why AMD has been so hard to enter, why it's been so hard for AMD to enter the enterprise data center space is because every time coming from the enterprise and building lots of data centers or doing lots of data center deployments, what I will say is that if you change your x86 architecture, right, or whatever, Intel, if you want to swap, you can't just, if you have a server farm is what they call them, you can't just like buy AMD processors and put them into the racks. It does not work that way. You have to have a net new deployment of brand new data sets, brand new servers, everything. It's a full-blown rip and replace of the entire stack to put AMD into a data center. It rips Intel out and replace the entire thing. That is what we're seeing right now. We are going through brand new builds of like work sets, like brand new data centers, things like that. It's not what we had before. So if there was ever a time where someone could make a new massive wave in that space from a CPU perspective, I mean, it honestly is now, because it's a brand new workload, which requires brand new deployments. And before other than a brand new deployment, net new deployment, you have to be depreciating an entire data center or server farm, rather, to get an AMD chipset in there. But right now, we're talking about a brand new workload deployment. Yeah, so AMD, in terms of performance, zero question. So the term is client. When he says PCs and laptops or desktops, we refer to that in the enterprise space as your client, like your endpoint. But servers, we're not. So, but the workload that is being built is at the data center. We're not talking about laptops, desktops, and phones or anything like that. Not those clients. Like server client is the big one. That's the big money. That's the big money one. And Intel is still the predominant incumbent in that space, even though AMD still is going to be a better performing chipset. It's because of the x86. It's because of the architecture. It's because you have to fully tear down and rebuild entirely a new server farm, which is massive amounts of dollars. But that's what we're seeing. We're seeing that. We're seeing new workload deployments. It looks like people are seeing silver right now and buying that. Okay, so the silver thing. Do you swap silver for crypto? Maybe that could be a play, but you got to have a very long-term time horizon. Do you guys want to talk about this? Burry says he wants to I mean, it's a funny headline. I do not subscribe to this, but I did see GME in the headlines a little bit. Let me just check on the stock. But yeah, Burry said that he was trying to buy GME. Yeah, it's not. This thing's not really moving much. I mean, it is for a regular day, but like, yeah, I don't see anything special here other than a counter trend bounce. A trend is down for right now. I don't want nothing to do with this, but he did say it. Let me see. I know Evan posted it. What did he say? Yeah, this is hilarious. He has been buying GameStop. I mean, it's not really. I just don't. I can't get behind it. It's a squeeze play. If I was Burry and I could, I don't know. You're going to be somebody's exit liquidity. He'll be out at 30 before 30, guys. That's all I'll say. He'll probably be out before 30. This thing's not even holding right now. No big deal. All right. So as far as the calendar, we'll go through some tickers and stuff like that later on, but we'll see. Let me get through this really quick, and then I'll take a look at the Catalyst Watch, and then we'll get into some charts. But so right now I think we just got the 2-year note. So in terms of bond auctions, there are only two to pay attention to. One is the 10-year note. The second is the 2-year note. Think about it in terms of like when you hear people talk about something called the 2-10 spread, they're talking about the 2-year and the 10-year bond, the difference between those two bonds. That's what that is. So the 2-year and the 10-year bond end up being the most watched auctions. Gee, my voice is, you hear this, dying so fast. Tomorrow, consumer confidence, but the big day is Wednesday. Wednesday we get FOMC. I don't think that anybody's thinking that we will get a rate cut this week. But my God, you should not think that we're going to get a rate cut, especially when we just talked about like the reinflation, disinflation thing. You get a rate cut and we stimulate, and the government's going to be worried about stimulating too much like personal spending. It's just not going to happen. There's no reason for a rate cut to be on the table. Honestly, even for like this year, I don't know. But not this week for sure. So that kind of leads us all into the rhetoric. And I do think that the market is pricing in some flavor of like expanding GDP or expanded economic growth while inflation goes down, which is a very hard thing to do. If that's the case, I don't even know what you would call that, but if that's the case, sure, we can have a rate cut at that point in time, but the Fed's going to need to see a lot of evidence that that's actually happening, and it ain't going to be anytime soon. So, yeah, Trump will always call a cut, but it ain't happening. It ain't happening. So if you're believing this, not happening. No shot that that's happening. Yeah, or get fired. That's typical Trump. Typical Trump. And Trump will have a conference. So Jay Powell's going to speak on Wednesday. Jeez, hold on. Jay Powell's going to speak on Wednesday, and I don't know if Trump has a speech scheduled or not, but Trump being Trump, I would not be surprised if this dude schedules his own speech at the same time as Jay Powell. Or like right before and right after, because Trump is not going to want to get upstaged by Powell. That's for sure. So whatever happens during the market, look, it could be a whipsaw kind of moment. Maybe we have a run up into FOMC that might get a little bit overdone, but we're not getting a rate cut. No shot. But regardless, it becomes about it's still about who will be the next Fed chair and any rhetoric around that. The closer we get to having a new Fed chair, the less the rhetoric actually matters also now. So this might be one of the most muted. I have a feeling this could be an extremely muted FOMC. Just my gut, almost like did it even happen kind of FOMC. Because I just don't really see any reason for the market to move off of. I don't. Like, what could he possibly say that the market's not prepared for? I mean, the only thing you'd say is that we're going to cut rates. But the odds of that happening, and the market's not prepared for that, the odds of that happening is like zero, like 0.00001, maybe. I just can't see that happening. But anyways, that would be what's not expected. That's definitely not in the market. But I just don't. Even if he says, because there's only 2 rate cuts priced in this year in total. So, I mean, we'll see. But my gut is there's probably some trepidation. Even if we pull back during this FOMC, Trump is not also Trump's not going to let the market stay down. You see what he did? Like the one time we had a pullback and he says Iceland, not Greenland, by the way. He said Iceland cost us a lot of money on just that rhetoric alone. He really watches the stock market, man. So even if the market takes a dip, he's going to do whatever he can do to, make the market come back up. Whether or not he's effective, I don't know. But at most, I think it's just more injection of volatility. And that would really be it. Which, if you're a long-term investor, volatility whenever you hear the word volatility, you should think opportunity. Because that's, from a long-term perspective, that's all volatility really is. But anyways, Thursday we get jobless claims. We also get imports and exports. And then Friday we get PPI, which we'll see. So we got PCE, which is personal consumption expenditures last week, meaning how much people actually spent on their goods and services. And did they spend more? Did they spend less? It's not inflation. The inflation number is called CPI. I think we might get it next week, but and that is consumer purchasing index. How much were they paying for goods and services? Did the cost of their goods and consumers' goods and services go up or down? That is inflation. That's literally it. PPI that we get on Friday is producer price index, which means are the people that are selling the goods and services having higher costs or lower costs, right? So if GDP is this high, PPI might also be in line. I mean, if PPI is in line, I don't know. But it's the mix between, and it's what you pay attention to in terms of the economic calendar is the relationship between CPI, which is inflation, how much people are spending, and how much producers are seeing like their prices go up and down. And how does that relate to the ratio of gross domestic product or GDP? And it's this relationship between all of these things that really the market's paying attention to. It's not, the market doesn't pay attention to a single number one way or the other, but it's the relationship between something like GDP and inflation. And listen, if you guys are looking for Miss Cleo, just so you know, who's not in the server? Like, my God. You guys need to be in this. The server is free. So come to the server. I'll just do another one. I'll post the link right now. Come into the server. You miss Miss Cleo. It's posted over there. There's a lot of stuff in the server. me see if I can. Oh, here you go. You are not. When you come into the server, it should look like this. This is, you have to verify yourself. You'll agree to terms. Watch over here. Once you agree and you verify, a lot of other channels are going to open up. You'll be able to type in chat, right? This is our chat, super active every day, all day. You get daily watch lists if you want to trade daily stuff. You know, like I'm in Datadog, by the way. You get a weekly trade plan. This is free. I mean, it's free. Chat with me, chat with the team. Every week this comes out. I mean, stocks we're watching, things like that, all the above. You get a little recap of how we did, 10% on the week, just on the watch list only, intraday analysis, all this stuff, some news flow, some free scanners. Let's see how the crew's doing. I know we had like crazy bangers, 10K, double. Yeah, everybody's doing good. Look, you'll see. It's just here. You could talk to us about whatever's going on. Emp is posting this, which means probably we're around that area. But this is all free, And if you want, like we do have, there are other roles. Like if you sign up or whatever, see how this just changed. Sports betting is here. This is not free. It's paid access. You get our trades, my trades, whatever. There's a lot of stuff. We do weekly group coaching. But anyways, dude, I don't know why you're not in the server if you're watching this, but it's free sauce. A lot of value is for free. and we just finished the first round of school gains, which means that if you want to come into the like more exclusive section where we do the group coaching and things like that, the apprenticeship, the course just finished, which is the course that we just finished is all of your foundational stuff. We're doing the apprenticeship, which is like 25 something classes. That's the round that takes you from a trader knowing nothing to, by the end of it, being like professional grade trader and knowing how to create your own trading systems based on how you do. That is going live now. So if you're interested in that, book a call. If you want to join the more exclusive version where we do group coaching around that stuff, and you get to see everyone's trade logs, me and our 10 other professional traders, book a call with the team. I'm sure that's somewhere here, and if it's not, I'll just drop that, but it's in my Twitter. It's just School of Gains. And worst case scenario, you book a call with the team, you'll get the first 7 courses of the apprenticeship for free. Worst case. Let me see. School of Gains. So you go in. Yeah, so here's my profile. You just go here. School of Gains. Done. Book a call with the crew. They'll tell you about it, what it is. Yeah, I mean, what are we doing here? Super simple stuff. In worst case, 7 like massive courses for free. Anyways, that's where we are. That's what we got on the deck for this week. Let's see. We do want to go over to Evan's post here. So he does a pretty good catalyst watch. Let's see what he's got. So Tesla, Elon, Tesla. Does Tesla have something going on this week? Probably earnings. So we got earnings season coming. So that's what we got to get ready for. Yeah. Earnings season is back and we are in full swing. I might actually start doing some of these earnings season trades. You didn't know? Oh my goodness. So I'm sorry, guys. I really suck at marketing, just so you know, obviously. He's not lying. Did you just jump in? Look, I'm not a self-promotional guy by nature. I'm just not. So if you didn't know about the server being free and opened up, I'm sorry. It's my bad. Like I said, I'm just not, we're not like that. We make plenty of money as it is. But if you want to, I mean, just come to your home. This is your new home. If you watch us on the weekly, there's no reason to not be in here. Like, even if you're just lurking, you're going to make a lot of money. And with whatever money that you make, buy the apprenticeship, because there's a lot of value there. So my bad for not saying anything about that before. It's just not in my personality to be salesy guy. Even though I have a sales background. Funny story, but I'm not super self-promotional. It's weird. It's weird for me. I suck at marketing. Chris, this is what I just suck at marketing. So my bad. I'm doing you guys a disservice by not saying anything. So you know what? Go into the server, talk in the chat room, ask someone to explain it. There's 4,000 other people there that will tell you all about it. It's not a small server. So there's that. So anyways, Tesla, Apple, Microsoft, Meta, UNH, Boeing, Starbucks, ASML, MasterCard, Visa, SoFi, Exxon. Jesus criminy. Sorry, I said the J word. But there's a lot going on. This is what it looks like. So earnings season full swing. I'm thinking we got some earning trades coming on. UPS tomorrow morning. I know everybody's been watching this. This thing's been, I say everybody, a lot of people. And if you're not, this could be an epic rebound. I don't know that it's time. The CEO of UPS, forgot her name, Mary something, maybe. She said that the UPS turnaround was supposed to start last year, like Q2, late Q2 of last year. The stock did not turn around. I don't think we saw any major turnarounds, but now the stock is starting to turn around. They had some union issues that might have held them back. Robotics is probably helping them. But the union is not going to help them, so it's a little give and take. We'll see. We shall see. Do you have to use the WAP app? For the apprenticeship and to be a paid member, yeah, you do. But it integrates everything. It makes it way easier. Mama's calling. Do you guys want to talk to Mama really quick? I might have an announcement, but yeah. Well, you sound sick. I'm live, and you're talking to the stream. Say hi. Huh? Am I picking up the boy? I'm live. Yeah, I don't know. I'll talk to you later. Love you, though. Bye. She had a question about who's picking up the boy. I don't know. Anyways, she didn't register. But Boeing tomorrow morning. AGNC tonight. Actually, this is going to be a little interesting. This is a REIT that's focused on real estate, goodness. Watch this one, though. This is going to be interesting. If it comes down and holds its low, this is pretty far gone from the highs. If you're looking for a little diversification, very nice divvy on this guy. But in a sector that could be rebounding also, that could be like a double whammy to the upside for a long-term investor. Definitely worth a watch. UNH, I know people watch this. I just don't think it's going to move anywhere. On what could they say? Raytheon. There's a lot of stuff this week. My goodness. Texas Instruments, Seagate. Do we have Western Dig this week too? Uh-oh. Seagate here. We got some of the big ones. Where's Western Dig? Maybe it's not reporting yet. But Seagate will affect Western Digital, SanDisk, the whole cohort of these super cycle SSD. It's SSD. It's not even memory. It's like all SSD super cycle, which is why you see the hard drive companies doing the same thing. It's like, I was talking to my buddy Amit last week. I was like, is SSD, I think SSD by weight is almost more valuable than gold right now. I'm like, by weight, SSD, geez, this stuff is insane. Boston Properties, that's another REIT. Interesting one. I don't think Starbucks, but the tooling companies as well. So ASML, and I saw some others. ASML, Lam Research, KLA. Oh, there's Western Dig right here. KLA. These companies are the companies that is Applied Materials. Do we have AMAT? I know he said we did. It's on here somewhere. It's got to be. Applied Materials, all these stuff. These are the companies that if you're going to build fabs, which is what Trump says he wants to do, bring in like production back into the U.S. If you're going to build fabs, these are the companies that are most going to be involved with that process. And so you'll see all these tooling companies going up along with your Seagate, along with your Western Digital's SSD powerhouse. I don't see Micron, but these two, like here, 1, 2, will move all of this space. So 1, 2, 3. So this could be that looks like is the first one. Is this a smaller one? I don't know. Oh, here's your SanDisk. 3. All of those are going to move, all the tooling companies as well. So crazy week ahead of us, especially for the SSD companies. They're all on deck. I mean, Power, GEV, Power is everything right now. Corning, also big build out stuff. Amphenol, I saw it on here somewhere. I saw Amphenol. ANPH here, APH. I think that's it. I think that's Amphenol. That's your cables, stuff like that. So GE, Amphenol, Corning. This is all your Ethernet, stuff like that. And a little defense, Textron, RTX. Dude, this is a big week, Stryker. So yeah, anything goes. Anything goes. SoFi on Friday. Man. And we finish off the big integrators. Well, all I'll say is that this could be a big turning point in the week. I think this is way more important than some random FOMC. I don't think FOMC this week is going to do much. But all of this stuff, yeah, even though these aren't the mega caps, these aren't the Mag 7s, these are the ones where there's strength in the market. Seagate, Western Digital, SanDisk, all the tooling companies, massive, and some industrials, big giant week. Good night. Massive week. GLW, dude, Corning Judgment Day. Look, these are like Amcor type plays. Amphenol, GLW. It's like they should be steady movers. They don't move massive normally. But yeah, even if that comes down, I mean, I wouldn't play any short-term options. Like if anybody here was in Intel earnings, like you probably got decimated. But I will say 42 is support. So Intel just came right back down to support. It might be a pickup at this point. It might be. Maybe it goes down to 38, but it might be a pickup. If you missed the ride, this is a nice dip. But yeah, Jay Powell speaking this week. You guys didn't think I was going to say that about Intel. Yeah, after talking about Jensen saying we're going to come for Intel's lunch, which is basically what I heard him say. Yeah, I heard him say that this morning. So, there's that. FOMC release January. Yeah, it's a big one. It's going to be just like that with Trump over his shoulder. It is 2:30 p.m. Eastern on Wednesday. So that is a tipping point, turning point for the market for the week. Although I don't think it's going to be a big one. I don't know. I just my thoughts. So Catalyst Watch from Evan. Monday, AppLovin and Salesforce. Those are just volatile. CRM, dude, is so beat down. I don't know. So, AppLovin's been hit with that short report, essentially, under investigation for whatever. Who knows? Earnings. Nucor. So Nucor, whether or not you believe it, is going to be a beneficiary of this administration and this data center build out. Crane Company I'm not really familiar with. Dividends to watch, Costco, Paychecks. Oh, God, I haven't seen this stock in a long time, but that thing was looking ugly for a while. Morgan Stanley, turnaround of the generation. Hecla Mining, Investor Day. I think that's a gold miner. Earnings for Tuesday. Yeah, Boeing, Raytheon, Texas Instruments. UNP and like the transports, which is like UPS, if we're in this kind of reflationary / in this kind of Goldilocks setup, it would be a REITs catch up and possibly transports. So interesting watches. General Motors, new all-time highs. I haven't seen it in a while, but that thing's doing really good. Ryanair, all-stock merger. Did they do that? Oh, goes to a shareholder vote. So anyone in Europe, that might be interesting for them. A lot of miners. Visa, Boeing, Astronics. I don't know. This is a pairs trade. What a name. Astronics derives 12% of its revenue from Boeing and trades in tandem with it following earnings 75% of the time. Okay. This is a pairs trade. Maybe straddle. And then Tessie, Microsoft, Meta, ASML, IBM. I'm not a fan of IBM. Yeah, LVS. Options trading for Brinker, Lending Club, no small cap. And Microsoft conference call. I wonder if we're doing Technical Tuesday this week. I don't know. I think he said yes. We'll see. Just a massive week. M&A Watch, Sealed Air, Church and Dwight Analyst Day event, Starbucks Investor Day. I think that's Thursday. So if Starbucks comes down, they'll have an Investor Day later. That's weird that they have these back to back like that. Yeah, where was Starbucks? Starbucks is Wednesday morning. Oh, so it'll be like an all-day thing. Wednesday morning. And then Thursday? Is that what that said? Oh, no. Wednesday morning. And then Thursday, all day, it has an investor day. Interesting. I don't know. It's an odd one. And this is where we are on the economic front. So durable goods today, we also have the 2-year note. There's not really anything happening until we get to Wednesday and then Friday. So again, if you're looking at this stuff, it's about consensus versus where we come in. The only thing that really plays is that 0.2% month over month for we call this the headline number. Is the consensus and the prior to stay exactly as is. And then the core consensus is that goes up slightly higher. But that's it for that. I'm just going to check one other thing, CBOE FedWatch tool. And see what is priced into the market today. %97.2% chance that we stay the same. So again, 97.2% chance that we stay the same. There's no cut priced into the market until, I don't know what month that is, January, February, March, April, May, June, till June. Then we get a rate cut priced in at 46%. And then it's not until maybe later on, if at all. That's like maybe if at all. And then look at this. This at the bottom is what I would say is like, all right, that at the bottom is actually saying that we could have a rate hike. So if we have a second cut this year, then the market is already pricing in potential of a rate hike. That is September, October, or December of 2027. That little blip at the bottom there is the one thing in my mind that could create that midterm election year pullback, because people are not looking at this, but you guys have it now right in front of you, giant big screen, that there's a rate hike that's getting priced in late 2027 by the market right now. So the closer that comes to fruition, regardless, that's what the market's pricing in. Not my opinion. It's just what the market is pricing in right now. So that's priced in at the moment. If that gets any more aggressive, that could lead to a pullback. And that would only be due to very high growth and the market thinking that maybe we're a little bit overheated. But that is it. Other than that, what do we have to do? Other than that, boys and girls, there's only one thing that we need to do before we can jump into the charts. And I know some people are asking for this earlier, but it is time to check in with our good friend, Miss Cleo, and see what she has to say for us this week on the tarot front. Okay. You need the spooky intro. So this is where we're at. This is where we're at. She has given us a theme card, and we get 1, 2, 3, 4, 5 cards that signify the day of the week. So this is the week as a whole. Ace of Wands. I think the Ace of Wands is good, but it's like a 1. So maybe it's, I don't remember if that's a start or what. Yeah, Death is today's card. I don't read these very well. I don't know what happens with this stuff. All I can say is I'm just looking at a lot of what she calls arcana, high priestesses, kings, death, aces. I mean, there's not like the 1s and 2s or 3s that we're used to seeing. Death is a weird one. I don't remember if that's good or bad. Maybe it's death to the bears. Maybe it's death to the trend. I don't know. But sometimes I think this can be a good card. I don't know. And then Knight. I think the Knights are pretty basic. The Priestess. Yeah, man, I got nothing here. I have no idea what she has to say. So let's go ahead and see what she actually wrote. So the theme card, Ace of Wands, let's give us, last week gave us the World, and now we start from scratch with one of the trendier aces in the deck. There are multiple aces? Oh, yeah, I guess so. Wands, pages, whatever. So expect a week of impulsive sessions. I read that as volatility. Fair. That make it difficult for day traders. Money in the bank for those that are adept at trading volatile markets. Oh, if you don't know how to read. All right, gotcha. Charts, which is why you should go to the school against. But anyways, we may see several trend days throughout the week. I would actually echo this, but they could be counter-trend intraday moves. A close in the direction of mean reversion is most likely. Mean reversion. I don't even know what direction that is. We had a red week last week. Did we have a red week? I don't even know if we had a red week. Straddle. I mean, I might be short straddle. Maybe. We had a red week last week, which bodes well for the bulls this week. There's a little trend that I could maybe see, but Monday is Death. This card usually sets up a day of mean reversion, followed by the same result the next day. Same result in that direction. This means green day Monday, but red day. This is typo. This means green day Monday, but red day. That probably means Tuesday. Turnaround Tuesday. It rarely trends, so either direction we get is likely to offer a boring day. This trade is probably a fade for Tuesday. Yeah, so she meant Tuesday for sure. Tuesday, Knight of Pentacles, hard charger, and stays steady all day. Usually brings medium to strong trend, so be prepared to chase momentum if opportunity arises. You may start slow. I like that as a day trader. So a slow start would not surprise me, but be patient. Wednesday's the priestess, tells us to hang tight, go inward. So this means chop day. Yeah, I think is that FOMC day? I don't even know. And trust our intuition. It usually goes the opposite direction of the preceding royal day, often matching the energy as well. So turnaround Tuesday, whipsaw Wednesday. The last time it followed a night, it was a huge green trend day. So red chop yields green chop, green trend yields red trend. Yeah, reversal, reversal, reversal. Gotcha. Thursday, page of swords, which is why I said short straddle maybe. Thursday, page of swords. Pages try to shift the tide and take us into another, this just sounds like a nightmare, new direction. And though many are weak, this one is the exception to the rule. Usually brings medium to strong trend, so we may get yet another chance to trade momentum. In the opposite direction? Not a swing trading week. Sounds like a day trading week. Just remember that swords will like to chop the side of the trade the most, prone to pain. So be careful if you're profitable Monday through Wednesday. Expect 1/3% from the close. Did she mean maximum? It's basically flat day. Chop suey. Yeah, that's post FOMC. So Friday, Ace of Swords, page to ace suggests a combo with the finisher. Like jab, uppercut, combo finisher? I don't know. But if Thursday is green, a red Thursday most likely brings a strong green day here. Okay, yeah, just chop, chop, chop. And we close the week flat. Is that what I'm hearing? Strong green bias, except when following major arcana, which we are not doing. That means we should be buying. Oh, we're not. This is not. Or I don't know. See, this is how little I know. That means we should be buying dips for this session. Worst case for bulls is slightly under flat close. Painful chops. Yeah, for sure. There's a lot of back and forth this week, full of trend days and mean reversion. Won't be a great week for swing trading. Got that. But day traders may enjoy. Yeah. Sounds about right. Sounds about right, boys and girls. All right, let's take a look at the charts here. Trading view. Super charts. I usually go into, why is Jamie there? That's funny. This is not the normal. Here's the chart I'm looking for. Let me just make some quick adjustments for you guys so you can read stuff. All right. So we got our levels. The white lines here are like my NFP levels, if you didn't know. Okay, so yeah, I know exactly where we are. Open above 689.18, that is an NFP low. So within 24 to 36 hours, we should see ourselves at 695.30, which is about where we are. That's a clean trade. If we can't get it open and close above that, which, by the way, today you open below, which means that there's a 0 probability of me swinging long today. 0 probability of this continuing. Let's say 10% probability of it continuing. Extremely low. Extremely low. But we can get up to 695.30. So it can continue to there. But go higher? 700s? No. That's not what I'm reading here. What I am reading is that we are back in the box and the chop can continue, which means that this is exactly what Miss Cleo said. So it's between 695 and 689. Honestly, I'm right there with her. So if I was going to be a seller of condors, I would be selling probably near 700 calls at the close of today, maybe tomorrow morning. And then expecting that we pull back, and at that point, probably selling 685 type puts down here, because I would be expecting to go doom, doom, until we get a full multiple days closing above. I do think that as long as this holds support, look, when we lost this level up here, we could not get above. We broke down below. The way this works is that you go to the next level, like you go to the next one, and we instantly got down here. And if anybody's confused with this NFP stuff, we're looking for 2 to 3 days closing above or below, or at least minimum a clean open and close above one of these lines, right? So if this is our lower box down here, what I'll say is that you got an open below. So I should expect that we can continue down to here, but only to here. Even if we got to close above, it's not going to happen. That's like over here today. We're not going higher because we got an open below, and we ended up getting a close below is what we ended up getting. So for sure, we should get down here. Over here, we get really close, very, very close, instantly pushes back up. Cool. This is the chop box right in here, but you get a close. Well, you get a close way up here, and we get a Trump tweet. So you have an open below, close above, still not swingable, but where's the target? That's the target. You're basically there. It's not until you get to today where we have here open above. We do not have, if I think this is going to go back down, I need to have multiple days closing below and opening below 689. Over here is open above, close below. You don't have, I have an open above and a close below. So open above, close below, not happening, right? Open below here, but a close above, not happening. None of this is good enough to say we're going back down yet. What it is good enough to say, we stay in the box. And I would say for the week, extreme high probability that we do this. Probably exactly that one more time. And that's what I would expect. That's what the system tells me. It's very similar for the Qs. QQQ. Yeah, there it is. So the box is, boom. So do I press the bets long today? Nope. Nope. This can continue on. But even if we open above tomorrow, let's say if we open above tomorrow and I close below like this, that's exactly what I would be expecting. So if we do have an open above tomorrow, cool. We would have to have a close above also, meaning like that full open and close has to be well above 627.88. If I don't get that, I can't expect continuation. One thing I will say is that this broader trend here that we're looking at on Qs, look, this is, and I had to take the wicks off today because there was some crazy intraday wick on my trading view, is that we do have this broken downtrend before. It doesn't mean that we have to break out, but we're getting very choppy. And the chop here is leading me, here's my consolidation. We're slightly out of this consolidation. So if there was to be a catch up, this would be it. But because we have the Mag 7 coming in right behind it, look, it's just choppy. So this can kind of chop in the same box. It's not going to be until we get like firmly over 630 that I can say, hey, look, yeah, we open and close above, we're up and out. And when that happens, I would expect that January effect trade on IWM to pull back. And that's exactly what I'm seeing already. So this January effect trade, and if you're in the group, you already know about this. We had this breakout from this area here. First target acquired, it's 270. And I posted about this, blah, 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 270. I think this can chop a little bit, but you gotta anticipate some kind of resting period. I'd like this to start closing inside of this box and kind of stay stuck there for a little bit between 275, call it, and 265. Today, we saw a little bit lower, but I think if this trend is going to stay intact, that's probably the lows for now. And if it's not, then we have to have a full-blown retest, which may set this up. But if this is the case and we do get this retest here, what this sets up for is a little profit taking in IWM. That's this chart, IWM 30-minute chart. And for this money to probably go into the Qs as a catch-up, like that. And if I get that, that makes a whole heck of a lot of sense. And I'm actually seeing a little bit of that in the charts. So net, I think this is healthy. It's kind of like somebody selling their silver and swapping it out for gold. IWM being silver and reverting back to the gold, what have you, as anticipation into earnings season. Because while earnings season starts this week, it's not the Mag 7 week. The Mag 7, I think we have a setup, and last week we had the setup too in general, for a lot of counter trend bounces. And we saw that namely in names like Microsoft, Meta. Just to be crystal clear, those are counter trend bounces. The trend is down, but we're bouncing inside of a downtrend. Same thing with QQQ. The question is, do the bounces bounce high enough to change the trend, which is possible? But for right now, these are counter trend bounces, or if you want to use the word oversold rallies, but still below their highs. So a bit of a catch-up setup, if you will. What is this? Paracentamol. I don't know what paracentamol is, man. Anyways, silver, someone said silver below 100. I mean, it's 105 target. I'm still not running the pawn shop, but that's kind of like my thought. Like we're very much in target zone, 105, 110 on SLV. This is not silver, the actual silver futures SI, 110 over its daily range. You know, we get into a very volatile situation. Pullbacks can be violent. If this hovers somewhere around $100, I mean, this is super bullish, super bullish. You know what they say, stocks over 80 go to 120, right? We didn't get to 120 quite yet, did we? Just under 117. Look at that, 117.60. Here's that 80 breakout. I mean, that's a given at that point. Can this chop around? Yeah. So a pullback, this ain't nothing for a silver pullback. And like I said, if it gets over that 120, we definitely see 150. But if it can't extend beyond 150, that's why at that point I would probably be thinking about selling some kind of swap or doing some kind of swap. And it's purely technical. Purely technical. I mean, my buy on silver having that ratio was purely technical also, so you can't fault me for that. But yeah, what a chart, dude. What a chart. What an insane breakout. I mean, this is where we are from this. This is Silver Weekly's chart. Full extension. Goes to 130. I mean, if we're over it's 128. If we're over that level, I mean, then it's in an irrational kind of technical spot. Can it continue? For sure. But at that point, I'll just tell you that the longer term charts don't really help you that much. It's almost like hoodie getting to 150. Who knows? Doesn't make a whole lot of sense for silver at that point in time. In my mind, I justify hoodie all day long at 150. But for now, as long as silver futures hold over 107, we're not seeing that pullback. And so that's what this is going to say from that broader trend perspective. This is a nothing burger pullback. Honestly, we're not even where we were Friday. We're still well above that. So 107 is a healthy extension pullback. We get back over 112, 18, 113. Yeah, 125s is in the cards definitively here. So watch this 107 on silver futures. That's a big one. What's copper futures? FCXN. Copper pulling back a little bit too. Oh, this is CFDs on copper. That's fine. I could still chart the same thing. Copper strong, but like, look at this. This is not the same chart as silver. It's a lot more healthy of a chart. But even if I were to say here to whatever there, very similar kind of extension, but you got 7. Oh my God. Maybe I do that swap for copper. So if copper's over 730, it's like this. If copper's over 730, it's going up here, like without a question in my mind. We're not there yet. It looks like it wants it. Maybe that's the trade. Am I crazy, guys? Chat, let me know. Would I be crazy to swap silver for copper? You want to look at CoreWeave? Look, if you're bullish CoreWeave, you're going to be bullish copper. CoreWeave's going to be the biggest buyer of copper, like in the land. Same with Nebius, or any neo cloud for that matter. Dude, someone call Steve the milkman and say maybe we should be doing this with pennies, looking for copper pennies. Not crazy, right? Will it have the volume? For sure. This is going to happen. If this happens, you guys think that the silver breakout is crazy. Copper has it could also happen. But what you should be seeing on my screen is that it hasn't happened yet. And that's kind of what I'm saying. It's like, it hasn't happened yet. I don't know these. This one looks like it's happened yet. Copper futures. So I'm using CFDs. Okay, so I'm just on the wrong chart. This is happening. It's like the first leg. Yeah. I mean, it might not be crazy. Because like this is, to me, it's going to be more real. But this is my Freeport trade. Oops. Which I had a short, I just took this down. I had a short $63 call for next week on it. I'm going to take that down today. But yeah, Freeport on a monthly. So I think this is 80s plus, maybe hundreds, in this whole thing. Can it be super choppy here? I think so. This is a monthly chart, by the way. But this takes me 200s, then maybe 123 at a basic breakout from here, which, again, hasn't happened yet. So this has not happened yet. Look at this chart. Look at this chart. So they just did earnings. Freeport did, by the way. So you're right at the top. Maybe I can keep this 63 short call on for a while. So they just had earnings, basically nothing burger, pullbacks a little bit, gets bought up instantly. I think that if you're not paying attention to this chart, you're like not even looking at the stock market or what's going on, because this is going to be a big deal if it goes. I mean, you're talking about a 20-year base. You know what they say? This is 2008. This is 2007. 06. Yeah, you're talking about a 20-year base They could potentially be breaking out. What they say is the higher in base, the longer the base, the higher in space. That's what they say. But you know, in time. Yeah. Freeport is mostly known for copper. They do a lot more than copper, though. This is a strictly copper miner here, SCCO. Looks like they're splitting. They have another scheduled split. What is that? That's a super weird split. 126 shares becomes 125 shares. Okay, so there's some kind of, I think that's a regular thing. It's a really weird split. But they have earnings coming. Huge run up. Copx is the ETF that tracks all the miners. It's a newer ETF. Well, newer. Well, that's not newer. It's in its breakout. But this is kind of like inverse of, you remember when gold was doing the thing, and then we were talking about gold miners. So gold, sorry, it's a precious metal show today. Gold doing the thing, but GDX was holding back for a very long time. GDX is it's just now starting to go. So I think your higher beta is definitely here. These guys have their costs being like fuel and things like that. They have earnings to deal with. It's different than just having gold. But here's the GDX miners. This has not, great move, but it's just also just starting. So if this holds 100, then you're decent here. It's a monthly chart. Can't believe I guess it's held it. Probably 125s. Geez, I've been watching these charts forever. But I'll get to some requests here, and we'll start moving on. So hoodie, I think, so AFC, NFC championships complete. Did you guys know, every time I look at this Hood app, it's like they step up their game just a little bit. But these last two iterations, they haven't really done it in the way that like people are noticing. So I noticed that for the championships games in the NFL, we now have first quarter and first half bets in addition to full game bets, which I think was a mandatory thing for them to be able to capture more on at least the Super Bowl. So, less games, people still want to bet. I think that's helpful. I still think there's going to be trouble here in terms of like, do we listen, it's very simply, hoodie's got to get over 110. If it gets over 110, like 109 and change, but 110 right here, this yellow line, essentially this prior consolidation high, like this general area. If it's over this, cool. Like we are going to go to 115. Like that, I think is it's going to be a given. At 115, that's real resistance. And it's possible that we see that during earnings. In the meantime, from a trend count perspective, you have equal lows here. You're holding your general area of support. You're hovering over the 200-day simple, but you're not really bouncing with any large amount of strength either. So I think from that perspective, you'd want to be a little bit more cautious too. Where hoodie lines up for me is it has hit this area here of like a pullback, 104s, give or take. It actually breached it a little bit, but the bounces here, look, yeah, we should get here definitively. What I'm saying is that we need to hold this area. And if we can hold this area, cool, we can go into 115s. This is a counter trend bounce, meaning the trend is down. And even if this looks good for a little while, the chart's not fixed. And that's like the unfortunate truth. But it is what it is. The prevailing downtrend is this guy right here. So I can actually see this bouncing all the way up to, what is this, like 130s. I just cleaned up this a little bit. And I could see this up into 130s. That could still, all of that is a counter trend bounce. The trend is still like, these are your higher highs. And so one thing I would caution here is that if, look, if this is you have equal highs here, you have a lower high here, let's just call it lower high there, and then you have another lower high here. You had your prior low, right? Then you have LL is lower low. We have, at a minimum, we have an equal low. So that's the best that I could really expect, is that this is like an equal low. It's basically right on it. This can bounce, and why I say this is because even if it gets all the way up here, that could be a counter trend bounce, is because if this is the last lower high, I mean, where could a new lower high show up? That's pretty high. So I think in reality, you have to be aware that anything up in here can be yet another lower high. And while it might look good for a time, you have to be really cautious about it, because what you'd want to be looking for after that is different. After that, you'd be looking for a higher low, which means that anything here, this could hit that and pull back and hold in here, and this prevailing kind of uptrend, I'd want to see this from here bounce, and then eventually it breaks out, right? But net, where we are, big time consolidation that's just getting tighter and tighter and tighter. So if you're about trade location, I don't mind it here. What I don't want to see, first of all, what I want to see is I want to see a reclaim of 110. I have to start seeing that to get even a little bit more optimistic on this chart. Until then, it's very much at risk. It's at risk for not even being in consolidation, and at risk of being like a full-blown breakdown, but we're not there yet. So, and we got earnings around the corner. I think it would be good. It's at risk of losing the consolidation if it can't get over 110. It's not about losing a level. It's about not wanting to see even that. Like, that would be worst case. So even this is what I mean. That's a counter trend bounce. We got a long ways to go on hoodie, which means that if you're in hoodie, you shouldn't be in it for a trade. Like, the trades are going to be choppy and sideways, and not like, there's a lot of work to do on this chart before it's back in a big uptrend. So if you like it, you got to like it for a lot longer time frame than, a month or two. And if you're not in that type of mental state for hoodie, I don't think it's worth your time of trading, because if this does go to consolidation, these levels and consolidations are going to get more and more tight. So the range might get smaller and smaller. Intel. 42, look at that, 42.55. It's right there. So this was the prior breakout here. And even if I do this, 42, actually watch this, 42.50. Let me do all the way across this chart, because this is, even though this is a 4-hour chart, it's not a lot of time for the underline. When I zoom out, see where this becomes a big deal? See that? Let's do it again. You see that? Let me go. You see it now? What is this, 42.57? Let me go do it daily, or let's go to weekly. So 42 and a half, give or take, is a big deal. This is 38. When I said earlier, I was like, maybe it goes to 38. That's why I said that. So 38's big support from this breakout here. 42 is decent pullback. But this 38 level, and I'll just turn on that volume profile. Right here, 37, just under 38. See that? That's where the point of control is really for this stock. So 38's good, 42's good, 38's better, right in here. And that's where the massive consolidation has been over the course of Intel's history. Does it get all the way back there? Doesn't have to get all the way back there. It does not. We're about to find out what the appetite is for Intel. So if this is good enough for a lot of people, just being right in this area, it very well could be. But if I really like Intel, maybe you look for an overreaction pullback. 37s, just under 38s. That's good. Let me see if I can get some confluence on that. So from this breakout here, yeah, under 40. Even if I took the whole thing, yeah, I get a little confluence. I'd have to go from here. Yeah, from this last low over here. So this is the low, a higher low, low, high, higher low, higher high. Most bullish pullback is that 42 and change, which is why I'm saying, like, again, I think this is more accurate in terms of fib placements. Definitely a spot to watch. If it loses this 42, I think you go to 38s or just under 38s, which is a deeper pullback and probably still okay, but you need to give that a lot of time to recover to be something like that. And yeah, at this point, you're going to be constantly watching this 42 and a half level for like the foreseeable future on Intel. Oh, is it Intel 50 puts for earnings? Amazon. I think this is looking good. So I have calls on Amazon now, not long term, but like March. I'll probably have to do something and spread it off again, sell some near dated, because even March is going to have a lot of IV built into it. I think this is good. My level I need to see is over 243, which is not happening right now. So it's a ways away. As long as it's holding 237, I think this makes its kind of trajectory into this rounding kind of bottom area, but not breaking out. The breakout's going to have to happen during earnings. So anything up here is kind of like a fake press to me, because it's all going to happen on actual earnings. But the chart looks great from a very long-term perspective. This is your chart. But does it really like hold? I think it's very much about very much about earnings, and like, does that really come to fruition? So yeah, this from here to here, yeah, we got to get over 260. Has to get over 260. Right now we call this, what's the saying here, high and tight up here. So 1, 2, 3 shots. I think the 4th shot to make it. And this has always been my kind of target, just around 300. So something like this, like that. That's a monthly chart though, so take it with a grain of salt. That's the long-term view. And I'm a swing trader, so that's typically how I view things. Oh, okay. So TT tomorrow. Cool. I saw someone asking about Nebius. We'll just early. Nebius, this is the last time I texted my buddy. I never got down to this one. I think this is fine. I think that you are still in this kind of consolidation area. Maybe Nebius gets a little jealousy or gets a little pullback because of CoreWeave, who knows? But, yep. So from what I just did from this low to that high, most bullish pullback is right here. I think realistically 87 and a halves is going to be where you land. 87 and a quarter. And that is consolidation. Like that's exact consolidation. The biggest thing to be concerned about longer term is this prevailing uptrend. That I don't really like the fact that this is going to hit that from the bottom and then failed. So that is the biggest issue. But from here to here, you should land somewhere in this general area. Look, and then you're going to have earnings, and technicals don't matter as much because fundamentals override. So yeah, I don't see anything deeper than 87s between now and earnings. And if it does go below, that's for other fundamental reasons. But that would be it. And then if you do see something like that, and then you see it bouncing back over, that is going to be super bullish to break out of that consolidation. So that's how I see it. Again, this is more of a long-term view perspective chart than the rest. The other one I always think about here is Kratos. I didn't know where this was. I think that's a buy. Am I crazy? Totally random moment of me actually picking this up, this chart. Yeah, this should be good for a counter for a bounce. What's happening here? Does anybody know why is Kratos down? It's a basic pullback. It's a technically perfect breakout retest. Yeah. I'm losing it, right? I'm not the only one to see this, right? This is textbook. It's textbook breakout retest. Ahead of earnings. 112.30. Sees a little blip here. That's from over here. Yeah. This looks like I could make a lot of money on a trade here. Not investment, but a trade. To 125s easily. Yeah, that's just a retrace half. That's just halfway of getting back from here to here after a clean 125 for the week. And if you get over 125, well, you're going to new highs. And what does that mean? Probably means 150, right? Yep, it sure does. Two types of confluence there. Even from equity, buying at 100, 110, under 110, with the upside target of 150. Yeah, this is heavy. That's 40% on equity, not even any leverage or options. Focus stock right there. That's a big setup. That's a big setup. Second EOSE. All right. Energy is everything. That's all I'll say. So EOSE looks like Ethereum, guys. Probably not what you wanted to hear. That's when you drop the skull emoji. Anyways, I'm joking, but not. Um, why is it pulling? I mean, it's holding here. Really tried to get out. I think as close to 15 as you can. When does this guy report earnings? Anytime soon? Yeah, so the trend is up. So this is how I read this. I actually like this chart. So you know how we say there's no such thing as a triple top, 1, 2, 3. This to me is like the third try. And so once this starts to bounce on a chart like this, what I'll say is tactically and technically speaking, this third pullback is usually a bigger pullback because if it tries to really go again. So I would let this breach this area before I pick up anything else. I would let these lows actually break over here, because what's true is that if I read this stock's price action, if I wanted to read this as a storybook, the story of eose in my, Harry Potter novel here, what is this going to tell me? Well, number one, this is going to tell me that there is a lot of interest down here around the lows, 15.5. But there's not enough. There's a lot of interest. It's not enough interest to push this over $20. It's not. So because of that, if the stock can't go higher, it must therefore go lower if it is to go higher. I know, right? But that's true. And so this 1, 2, 3 attempts here at the lows, let this break. Go ahead and let that break. I would say look for 14s right on here. There'll be this, it's losing the 20-day, simple moving average. You might touch the 50-day. You're probably going to breach the 50-day. I would look as close to 14 as I can. And around this time, if you see this chart bounce, I would not hesitate to pick this up in probably a large way, like in size. Because if you get this move, to me, cool. This is played out. 1, 2, 3, 4. 4, break it. Go ahead, break it. This is probably a counter trend rally to the downside. And I absolutely expect these guys, see these over here, to step in force as close to 14 as they can. And if and only if I see them actually stepping in, not just because it's there, but only if I see price reacting like this. The second is back over 15. I think that that's a big long. I think that would be a big long. And that means that you got to have a little patience here. But if this is a big long and this is big continuation to the upside, it's 25. So I'd rather take it like $20 to 25 is fine. But if there's an opportunity to take from 14 to 25, that's more like a double or higher, 26 plus. That's what the charts tell me. That right now, expect this pullback. I don't know what's happening and why it's happening this way. Expect this to breach, maybe even below 14, but not by much. And for this to get retested below your major significant simple moving averages, and probably something happens, whatever, some headline comes in. But the next attempt after this pullback, basically what I'm saying is the next attempt to break through this high, now that we know it has to come back in to protect more buyers, it's going to be a really good shot to get through. It probably does break through a little bit. In best case scenario, you see it pull back just like Kratos and then rip, roar, run. That is very typical, a very typical chart setup, very normal technicals. Does it happen? I don't know. I'm not using any fundamentals here. So If it was just a chart and the chart told me a story, that's the story that it's telling me right now. It's in the right sector. I think it's in the right sector. Energy is everything. If you believe in data centers, you're going to need to believe in energy. This is a never sell company. I sold my not all of it. I sold a little quanta. I'm just wondering over here. I'm just wondering if I should buy it back. I don't have a problem buying it back. I bought this like forever ago. But I mean, these are some of the greatest charts. Is it manpower? Monolithic power. Let's see. Oh, okay. That's a cup and handle if I've ever seen a cup and handle. But these are not your everyday trading charts. These are more investing charts. But these are great looking charts. What's the crazy one? Is it CEI? I know that's who knows? VG. Look, VG's at targets for me. I think at this point, I have a nat gas play, but it's not VG. It's Oxy. But I do believe nat gas is the real like fuel source here. Whether or not these companies make money, I don't know. But Oxy could be at. No, I'm not gonna say anything. But this is a pretty critical spot for Oxy, long term. People ask about like the UPS chart and Nike and all that kind of stuff. Yeah, this is where you don't want to see this base out. Literally right here. Do you guys know what was this before? Not short term, but a longer term setup here could be, a few years out. Good trade. 120 would be a triple in 5 years time, give or take. Who knows? Tesla's got earnings coming. No, this is a look above and fail here. Not happening right now. Nothing changes on this chart. It's 415 remains like critical spot. If I see something deeper, kind of pull back to 390s, probably going to be a buy. Actually, I could take this to here. That's interesting. Right on the upper trend line. Maybe this is it. Who knows? But yeah, I've been in the mindset that Tesla's going sideways for a while. That's exactly what we're seeing. I don't have a reason to be one way or the other. Doesn't matter what this chart does on earnings. It's not going to break the trend. If it goes down, it's 415. If it goes up, it's not. It's maybe back towards the highs. But again, no matter what happens on earnings for something like Tesla, from a chart perspective, it cannot change the trajectory of this stock. There's zero chance unless we have like a $100 move on Tesla's earnings, which is completely unprecedented. It's never happened before in the lifespan of Tesla. Anything under that is just not going to change the price here or the trend here. So, which is sideways. Because this has come down to 380, still be in the box. You can go up to 500, still be in the box. It's right in the middle. So either way, nothing. I'm not going to trade that. No trade here. What is this? Rolls Royce? What is Rolls Royce ticker? That's not race. RR is OTC for us. Oh, what? I did not buy a Phantom. You own a Phantom? It's 150 billion. I can't. Is this worth 150 billion? I just don't. I don't know. That's just a weird one to me. It's OTC over here. Yeah, it's not. Yeah, on the London Stock Exchange. So that's LSE. But still, so it's 150 billion OTC here. It's 105 billion over there. Is it worth $100 billion? I don't know. But I mean, they definitely did a lot of changes since the Phantom came. And they do have some nice cars at the high end perspective, but it's a volume thing. It's not that many cars that are selling. What's the big SUV that they have that my buddy bought? Our buddy Max bought. Oh, okay. Rolls-Royce is, so I'm thinking of them as a car company. So yeah, you'd have to not, so because there's a big aerospace engine here, I think you also have to not, if you're looking at Rolls-Royce, you have to think of them to think of in terms of defense. You think of them in terms of energy and that kind of stuff. So I'm thinking of it initially as a car, which is the wrong perspective entirely. Yeah. So there could be more to go. There could be, but from that perspective, I'm just ignorant. Admittedly so. Just another ignorant American. But I have to assume that this is, if you're going to go international, there's got to be better energy companies, no? This is probably the equivalent of our Boeing or something. Or no, is this the equivalent of our GE? I don't know, but interesting, ignorant American, not going to think about them as aerospace and energy, but it very much is, actually. It split the cars into by BMW. There you go. Oh, that's my time. Hey, is this true? They're coming to the USA? Okay. So you guys are all over this. We'll take a look. I mean, there's some other stuff. Look, Target. This is the definition of a counter trend bounce. You got to look for a higher low and let that appear. Don't chase this. Just look at the hyperclouds. This one pulling back, Nebius. We already looked at Nebius. CoreWeave, which is what we should have talked about. Look, CoreWeave, I have here. Let's go. Let's do this because this one got the headline here to here. 108.50 is target. So this should be it on Nebius. Believe it or not. That was upside target from this breakout. From that breakout. Now, question is, can she pull back, hold this support? Right there, see it? Multiple levels of confluence for targets. Can she take this, hold this breakout, or get a little bit higher, right? I think what we start to do is we look for something called the price of interest now. And that is about 90, that's about 10, 100, just over 100. If it holds that cool, if not, expect to pull back to 91s again. But all is not lost, because you'd be looking for another higher low and essentially a new investor base to show up in this general area, which their name will probably be Jose. I don't know. But just shout out to Jose, wherever he is. But in the meantime, someone did ask about this, and I'll leave it here. Marvell coming up to earnings. I do like this one. I think it's time to, I'll probably start reloading. I like this here. Break. Lots of retested, 1, 2, 3. This one I like, but again, it's long time like. It's potentially in a trading spot now where you might be able to get some kind of bounces into earnings. Maybe counter trend, maybe not. But let's see. She can't go down any lower. Just under 80 was usually a pretty good pickup spot. Let's see if she can take another shot at the highs. But all right, guys. That's it for me. The last hour of the day is incoming, so I'll leave you to it. Enjoy the trades, and I will see you guys tomorrow on a Mitch show. But adios for now. Peace.